Let's welcome on board Pradip Shah and talk about what he's making of the market right now. Pradip, hi, morning. Great to have you on the show. Pradip, just wondering which way is the tide going to turn, and is it even worthwhile predicting whether we're going to be decoupled from what the US is doing and continue to show resilience as we are, or, follow our own chart or course?
Well, I think we sitting in India can be forgiven for thinking that we are already decoupled. It's not so. We are very interconnected. And look at oil prices at $98. Can India afford $98? And even if we get $6 to $16 reduction in when we negotiate with Iraqi crude or Russian crude, but that's not good enough. Anything beyond $70 is really unaffordable. And you've seen our foreign currency reserves drop down by over $100 billion in the last few months. Some in defense, some because of revaluation, but also because of the oil. And we are not surplus. We had a balance of payments surplus because of capital inflow. But what if the capital inflows dry up? What if FPIs flow out, the foreign portfolio investors flow out? That is the big risk that India has, the foreign currency risk. And of course, globally, there's a huge risk also. Don't forget, interest rates are rising. And as a consequence, you might see, for instance, IMF warned this already, that illiquid funds may not be able to honor their commitments on redemption, the mutual funds. And that can cause big problems. Similarly, housing costs, housing values will fall, and mortgages will therefore be in trouble. And anyway, defaults will rise. And we have, of course, the private equity, which is highly over-leveraged in the Western world with buyouts. So they will cause problems. So there are lots of issues in the Western world that can shake up the markets, like it happened in 2008. You saw today Jamie Dimon's prediction that there will be a recession in the United States in 6 months' time. And he's talking of a further fall in share prices by another 20%. They've already fallen 20%, they'll fall another 20%. Now, how can we stop with that contagion? Because people, institutional investors that have got redemption pressure will have to sell wherever they can. And Indian market, if they've invested in India, and a lot of them have, will have to pull out from here also to meet redemption pressure. So there is a risk. Now, we have to live with this risk, but manage our affairs as best as we can in these circumstances.
And what's that best way, Pradip, to manage the crisis as per you?
Yes, so I think we are not doing enough on oil reduction, consumption. See, you saw in Spain, they say you turn up your air conditioner to 27 degrees and France has stopped heating swimming pools, and Germany has stopped lighting of public places and so on and so forth. So that kind of attitude. You see our ministers, in Bombay, how many cars accompany each minister and all. We must cut down our usage of imported oil products, and all oil on the margin is all imported. We use a lot of imported oil. So if we can cut down on that by getting an attitude that, look, it's good for the world, it's good for us in India. So cut down on that. And there should be a directive from only a person like Prime Minister Modi, who has a vast vision, who has Vasudhaiva Kutumbakam. He really tries to live by that philosophy. And he can encourage it, start with the ministers and start with the government so that it becomes symbolic. So that's the first step. Second, I don't agree in cutting prices. So reducing, for instance, excise duties. I think it is important to keep prices high because price is a great way to regulate consumption. So if prices of oil products are high, automatically people will start consuming less. And therefore, there'll be some saving on the margin. That's not good enough. We have to additionally do other things. So we are doing a lot on for instance, power in the solar sector and so on. But it's not good enough. We are importing coal on the margin for power. And that, if we can cut down and increase our own output.
Right, so point taken, but let's talk portfolio strategy then, Pradip, morning firstly, and getting your views as to whether or not you think at a time like this in the markets, it's better to cushion the volatility with exposure to classic defensives. So pharma, do you think would fit the bill, and what would be the rationale?
So, there are, first of all, I think I see the currency heading further south in India against the dollar. We as investors, as individual investors, can think of hedging ourselves a little more with natural hedges. So exporters. Now, some pharma are exporters. They've been hit with good manufacturing practices problems with the United States in particular. So they will have to get the act up, but there are companies which have both domestic market as well as export market. So those pharma companies can be good companies to invest in at the right price, of course. And then, of course, not only that, we have got the technology company. Look at the results of TCS yesterday. Very, very good, I think, in spite of whatever analysts may say that they didn't meet up expectations and tepid. I saw in the Economic Times saying tepid. But when you have 18% year-on-year growth in rupee terms, that's not a bad growth rate anywhere. In spite of the currency drop, we've got a positive growth rate. So I think we are got a good sector in the IT sector. And of course, the China Plus One strategy is playing out very well in India. So you have lots of these chemical companies, for instance, which are export-oriented, supplying the world from India, and of course, supplying the Indian needs also. So whether they are pharma intermediates or a chemical company going into other manufacturing chemicals, and you have so many of them, the Volatility Organics and the Jubilant Ingredients and so on. They will do very well with this China Plus One strategy. So there are many sectors in India, and India is a stock pickers market. We have over 5,270 listed stocks in the Bombay Stock Exchange. So, for instance, you can pick from winners from any sector effectively, where the company has done some resilient strategy to address problems that are coming forth.
Okay, so you're talking about that defensive tilt, looking at IT, pharmaceutical companies that have a decent exposure domestically as well as globally. What about the outlook, when it comes to the entire banking sector? The fact that now we are seeing quite a bit of consolidation in market share, a lot of the balance sheets as well have improved significantly. You're seeing credit growth picking up. Isn't this an attractive space to be?
Yeah, so if you noticed in the last year or so, the public sector banks have done extremely well in the market, and those who caught that wave did very well out of it. The government had the vision to recapitalize banks and allow them write-offs and give them time, and the Reserve Bank supported it. And also, the Reserve Bank put some certain conditions on certain banks to not increase their portfolio when they were under PCA, when their quality of loans were going a little awry. But banks may not continue like this. There will be a problem going forward if the economy goes down. We saw CRISIL report that the credit more positive in credit rating changes than negatives, but that may not continue going forward if the economy goes for toss. And at $90, $95 a barrel of oil, everyone is going to be affected. Inflation is going to be affected. I'm just glad that the Reserve Bank has been sober in not, going all out in striking fear in the minds of the public with interest rates or currency movements and so on. So measured movements by the regulators will help in controlling any possible panic in the market. But at the end of the day, we will face consequences. So banks will not be immune from them. And there are, of course, the retail bank sector and so retail lending sector has done very well for banks. But will that continue? If interest rates keep rising, naturally, from housing to, of course, the aggressive new fintech lenders that are lending on new age companies, they will all have some problems with it.
Right. Pradip, great to have you on the show today. Thank you so much for joining in with, all your advice in the markets and what investors should be doing right now.
Pleasure. Yes.